Often general and other active cash flow accounts do not have established goals that provide guidance, create accountability, and enhance returns from an asset management perspective. What follows is one method that should accomplish many plan objectives. We propose that accounts that have active cash flow and safety requirements could be managed using 3 or more distinct portfolio tiers or sleeves. The first is the income sleeve. Money comes into the account based on hours worked and is spent on largely fixed expenses. We will use the modest example where the income is $320,000 a year and the expenses are $300,000. At times when this is true, the excess income stays in the account to be invested in something. At times when expenses exceed income, there needs to be funds on hand to satisfy the shortfall for some period of time. Ideally, these dollars would be very liquid and virtually free of market risk. It is for this reason that you maintain an account to support your needs for a significant duration regardless of inflation or business and market conditions. When shortfalls occur, and they will, which assets will you sell in order to pay expenses? This is where having an effective income plan starts to come into play. Initially, you may want to hold at least 1 year's expenses in the cash account as a buffer to be maintained. A safe way of protecting the cash flow account would be to develop a laddered or cascading portfolio of high-quality bonds that, in February of 2016, would comfortably earn 4% or more. A portfolio of bonds with different maturities would be purchased. At the end of roughly the 3rd year, the bond would have an approximately 8% redemption as bonds mature. This gives you the advantage of choosing how to deploy these cash flows. If it makes the most sense to allocate some or all of the income to the cash flow account, it's available to you. If the cash flow account does not require any or all of the income to maintain its level, these dollars can be used in one or more ways. Now we can look at the account's goals to determine which action to take next. In good years, there'll be an additional $60,000 to invest in the supplemental or long-term account. And after the 3rd year, you can reinvest the redemptions of $80,000. This creates a number of options. If bond interest has improved in relation to your larger portfolio, you may want to use the $60,000 per year to bolster your holdings in addition to reinvesting redemptions to increase the overall yield. Or you may decide to create or enhance an opportunity sleeve. This is where a quality mission is important. It creates accountability and reduces emotion. It also tells you if you're heading towards your goals. If a long-term opportunity sleeve fits within the larger mission, it should be in a portfolio of largely equities managed to create predictable results with growth to offset inflation and fulfill fund objectives. In good market years, the opportunity fund could allocate gains to the supplemental income sleeve. In bad market years, it may make sense to use interest and excess cash flow to add to the opportunity accounts when stock values are low. Is the plan to eventually accumulate enough resources in the account to no longer have to rely on members' dues to support the organization's activities? If so, should we fund the supplemental income sleeve to the extent where it generates 125% of current expenses? Well, that would probably take a long time without an equity component, but if we can determine when we want to attain that goal, we could decide how much to allocate to long-term investments, how large to let that sleeve become, and at one level, it stops making sense funding it. One of the things Adams-Hansen does is build portfolios designed to deliver a predictable range of returns. This portfolio has a goal of 9%, and 98% of the time, it should fall well within the above ranges. It seems reasonable that an account managed as described would perform better, or at least more measurably, than using a bag of money approach to managing an account with active cash flows. You know, with a few years' profit and loss statements, we can design something like this for you. We can give you a sense of what the overall return should look like based on today's bond and dividend markets. Present this information to whomever needs to review it, and implement those components you choose us for. Adams-Hansen & Associates is an independent, fee-only registered investment advisory firm that has served unions and their members since 2009. Please allow a half an hour to meet with us. Call or email at your earliest opportunity. Thanks for listening.